we have to break this down to first-time buyers and retirees, right? The first-time buyers,
Yes.
who is that for? Of course, those are the younger generation, okay? We have to address what their struggles are, okay? And then we have to look at the HECM for the reverse mortgage and who that's for, right? For the that's for the retirees and also for their financial advisor. I always want to have that conversation as a strategy for their retirement, not just a let me just get a loan. It's really not that kind of a conversation when it comes to that. So that's okay. So the FHA is a program for folks that really don't have a lot of down payment. Okay, 3.5% down, you can get it. Okay.
Yes.
Don't have good credit, 580, you can get it. Okay.
Oh wow, 580.
580.
I thought it was 620. Now it's 580.
Actually,
wow.
Yes, they've changed that actually, but 620 is also still a crappy grade actually. They even
But you still can get a house.
They still lowered the bar. Okay.
Yeah.
And as I mentioned earlier, okay, I've had my share of credit struggles when I was affected by the .com bust. Okay, I mean, I was late on my payments, things like that. Okay, but I can tell you right now, okay, it's not like that anymore. I'm in the upper echelon of my credit. Okay, because I learned how to fix it, and that's where I'm gonna. That's what I want to share with the clients that we have. Okay, but FHA, 203B, low down payment, not so good credit, flexible down payment assistance. Okay, it could be from a CalHFA, which is through the state of California. They provide you with a down payment and some closing costs. Now, if you don't qualify for that, because they do require for that program to have a 660 for that program, but if you don't have that 660, you can always lean to Uncle Larry to help you out with the down payment, as little as 3.5%.
Yeah, that's a gift letter. When you have a gift letter as a gift, yes.
Right. And here's the other thing, okay? You can actually purchase a 4-unit building using this program. So think about that. You live on one, you rent the 3.
And you can use the income of the 3 other units to qualify, right?
Yes. Yes. Okay. Now, if you're worried, okay, well, you know what? I had a bankruptcy. That's okay. Is it 2 years old? Then you're all right. Had a foreclosure. Is it 3 years old? Then you're okay. Okay.
Yes.
So there's flexibility there when it comes to FHA 203B. Now I'm going to transition over to another program which is called a 203K. Now that one, okay, is when you find a wonderful property in a nice location, but it does not have a roof.
Right.
Okay.
Fixer.
Okay.
Yeah, that's for your repair.
So this program allows you to buy that house without a roof, and then you can finance this roof through the same program. Okay. So
is it 2 separate loans or
no,
is it one lump loan?
It is just one loan to cover the purchase, to cover the rehab of that house, and all you need is 3.5% down.
Right.
Okay. And all you need is a 580 score. Okay.
It's good.
And now, okay, well, the kitchen is kind of crappy. I don't want the kitchen. Okay, well, as long as it's 5,000 minimum in repairs, you're good.
But it has to be owner occupied, right? It cannot be for the people who are flipping.
Absolutely. It has to be owner occupied. Okay.
Yeah.
So not for investors. Okay. Then you would mention about the down payment assistance programs and grants. Okay. Now each city, they have their own down payment assistance and grants. Okay. And the thing with that is it's a first come first serve basis.
Right.
If they still have money.
Yeah.
Okay? So if it's there, you can get it. Otherwise, you may have to wait your turn to reserve your funds. Okay. Grant, you don't have to pay it back. Okay. CalHFA is not a grant. It is a silent second, so you do have to pay it back. Okay. So that's the difference there. Now, on the HECM, which is the reverse mortgage, Okay. Oh, by the
that's
way,
for the
okay,
62 and over, for the
yes, this
seniors.
is for the 62 and older. Okay, so
Mm-hmm.
the there's actually a misconception actually about reverse mortgages. Reverse mortgage has been around for a long time. Okay, but the new and improved, revised HECM, we call it HECM, is different from your old reverse mortgages. Okay, there's and I'm gonna attack it right now. Okay, there's misconception about, oh, is that the loan that's gonna it's gonna make me give up my house, give it to the bank? Nobody, okay, nobody has ever lost their house because of reverse mortgage. Nobody. Okay.
Right.
Nobody.
Right.
Okay. But I heard about my uncle Larry. Okay, that lost his house and now he's living at my tita. Okay. And what happened to him? Well, you know what? You go to Uncle Larry and you ask him, "Hey, Uncle Larry, how did you lose your house? Did you pay your taxes?"
Yeah.
If he looks down,
Yeah.
okay, and says he turns away, okay, you know he didn't pay his taxes. That's why he lost the house. There's other requirements for you to do when you own a home, okay, and that is to pay your taxes and pay your insurance. If you don't do
Well,
that,
whether
okay,
it's a reverse or a forward or a regular loan, you still have to pay your taxes and insurance. Otherwise, you're going to go to foreclosure. Because remember, that is your collateral.
Exactly. Right.
You know, whether you do reverse mortgage or you do the traditional loan, you have the collateral is the home. So you have to pay your taxes and insurance.
But you don't hear that because it's not sexy, right? It's not a salacious story, okay? So they don't. Uncle Larry didn't say anything about that, okay? Because he wants to be the victim, right? So, but in any case, okay, it's when I as I mentioned, okay, when I talk to homeowners, 62 retirees, 62 and older retirees, okay, I don't talk to them as a first-time home buyer would be, okay?
That's a different.
It's a different conversation, okay? Because a reverse mortgage to me is more of a strategy, more than just a home mortgage, okay? So it's a conversation that I want to have with them and their financial advisor. Actually,
yeah, because this is already leveraging the equity that you have accumulated for the last 20 to 30 years.
Well, yeah, I mean, think about it, okay? Retirees, okay, they're concerned about longevity. They're concerned about long-term care. Their lifestyle is going to be
right.
The liquidity, available funds that they can have, the legacy that they're going to leave for their kids, okay? All of these concerns are going to be addressed and protected by using a reverse mortgage. And even if you're not interested on that, okay, wouldn't you want to know how that works just to get yourself get some knowledge, on how to protect your retirement, to have a successful retirement and leave something for the kids? See, that's a conversation I can have later on.
Yeah.
One-on-one.
See, the most important thing is knowledge. It's good to know the facts rather than have some impressions or quick impressions about certain things. Like the first mortgage, unfortunately, did have a lot of derogatory impression on that over the years. But actually right now, especially the baby boomers are getting older, you have to remember, you have to take care of yourself first. I know we, the Filipino families, are thinking about our legacy, thinking of what we can leave to our kids. But think about it. What is important is you have to, or what you that you live in dignity while you are towards your golden age, and the best thing to do is to utilize that equity that you have and leverage it. I know there's some that is saying, oh, I have a lot of pension, oh, I have a lot of 401k, but I've seen firsthand through families and friends that did have savings, pensions, and they got sick. They got sick, a derogatory sickness where they were, they were in need of medical care, and since they cannot qualify as a medical, they have to dig into their savings. They have to dig into their equity. You know, bills started not being paid. You know, pensions are being used now, tapped for care, for long-term care, for home care, you know, paying all these expensive home care that we pay for $15 an hour, 24 hours a day. You know, these are certain things that you have to look at, you know, besides having a trust because you are a homeowner or you own assets like real estate. It is important to think about your options like reverse mortgage. Okay,
Right.
so yeah.
Right. And your mantra, okay, retire in style, okay. This
Yeah.
is the cornerstone of
Mhm.
that saying of yours, okay. Retire in style. You cannot
Right.
retire in style if you if you do not
Right.
utilize this
Mhm.
in your retirement planning, okay.
Yeah.
It is going to help you, your heirs, your kids, and your lifestyle. You're not going to be eating ramen for the rest of your life, okay, after you retire, okay. You're going to live a long time.